Welcome back to Morning Trade Live. It's time to focus on the big picture ahead of the opening bell. Donald Luskin's with us, Chief Investment Officer at Trend Macro. Thank you so much for being with us. So,
great to be here,
Adriana
Michelle.
Kugler, I'm glad, Nicole. Yeah, everybody's called me Michelle since I'm little, which is so
I'm
fun.
sorry. I'm thinking.
No.
I've got the Fed on my brain, and I'm thinking of Michelle Bowman, the governor who may be the next
I
Fed chair.
wish. That's a beautiful.
So would you like to be the next Fed chair?
Of.
You can just change your name to Michelle.
No, thank you. No, thank you. I don't know whether or not you would like to be the Fed chair on that Federal Open Market Committee, because they have a lot on their plate, don't they? I know we're focusing on the change now with Adriana Kugler out, and this position, which is really only until early 2026, and Stephen Miran now being named from the Trump administration to move to that role. Is that a good sort of fill, and what really needs to happen next?
Well, I guess it's an acceptable fill if that is the springboard for Miran to eventually become chair. We got a real problem that people are not opening up to. We need to be really honest about who this Miran fellow is. He's a buddy of Treasury Secretary Scott Bessent. He was suggested for the White House Council of Economic Advisors post by Bessent to Trump. Trump nominated him without even meeting him. That's how much he trusts Bessent. And 3 of the last 4 Fed chairs were White House Council of Economic Advisors chairs just before they were Fed chairs. So, there's a tradition for this being the ante room. Now, the problem is, as you said, Kugler's open seat expires in January. So the Senate, even if Trump were to nominate Miran for chair right now, the Senate couldn't confirm him for chair now because his term ends in January, and the Fed, the chair position doesn't even open until May. Right, so it wouldn't even mean anything to confirm it, considering he might not even be a governor in May, because he'd have to be confirmed for that all over again. Now, those are just technical points. The important point is, who is this Stephen Miran? He is the author in November of last year of a 45-page research report called A User's Guide to Restructuring the Global Economy. It is a Unabomber manifesto of economics. It is, MAGA protectionism is one thing. You can be for it or you can be against it. But this is, what he calls a cookbook for using obscure statutes, bizarre trading strategies, selective defaults to radically devalue the dollar, to cause the dollar to lose its reserve currency status. This is radical, radical stuff. But maybe you've had Dr. Miran as a guest. You know he is a very quiet, elegant, articulate man. He expresses these harebrained, crazy, end-the-world ideas with just all the sublime language of the Harvard economics PhD that he is. He could actually get you believing these harebrained schemes of his. So he is a very, very dangerous man for Fed chair. We do not want a Fed chair whose number one agenda is to weaken the dollar. Because when you weaken the dollar, you weaken the value of everything denominated in dollars. Right. That's stocks, that's bonds, that's real estate, that's your car, that's everything.
I mean, we did hear the president say it's not his goal to weaken the dollar. So at least we know one person that's
okay, then pick anyone else.
Right? Yeah, understood.
And the dollar, has the dollar been strong or weak so far since Trump took office?
No, it has been weaker, significantly weaker.
Okay.
Yeah, without a doubt. It was at 107 or 108, and it's in the high 90s, and if that, 97, 98.
Yep.
I understand what you're saying. I just don't have the report from Dr. Miran to, sort of play devil's advocate. That being said, the logistics are important. Can he be named chairman of the Federal Reserve if he's in this role? I mean, and then get approved between January and May?
Well, he would have to get renominated as governor, nominated as chair, both. So from where we are now as a starting position, he needs to be triple confirmed. Now, if you're Trump, you're just playing poker here, political poker. So why would you declare your intention? Why would you show your hand until the very end? Why would you exercise an option before expiration day? Keep people guessing. Because if he says right now that his goal is to get Miran to be Fed chair, he's never going to be confirmed as just mere governor, right? I mean, Elizabeth Warren is the ranking Democrat on the Senate Banking Committee. She's just going to tear this guy apart if she thinks he's going to be the next Fed chair. Now, the Republicans are in the majority of that committee, but remember in Trump's first term, he nominated Stephen Moore and Judy Shelton, who are both political conservatives who have somewhat radical views about the Fed. Judy Shelton's something of a gold bug, and I don't mean that in a pejorative way. He couldn't get those people through a Republican Senate. So we do not want a lot of focus on Miran right now, if you're Trump,
okay.
right? So the idea is to slip him in as a governor, and then in the 5 months remaining while that term exists, have him just keep his head down and his mouth shut, and people will forget about that report from last year, I'm telling you.
Understand. Yes, we understand what you're saying, Donald, and we appreciate your look at this. How about we also turn to the mandate of the Fed, looking at jobs and inflation? What do you think we're facing when it comes to the jobs picture? We did have an unemployment report, which was dismal, abysmal, whatever you want to call it. The rate, though, is still at 4.2%. So what say you about the jobs picture going forward?
Well, what say I is that we're in a very, very unusual jobs market right now, because over the, say, the 2.5 years between when the labor market normalized from COVID, call it mid-2022, through the end of the Biden administration, we had a really unprecedented wave of immigration, legal and illegal. About 5.5 million new adult immigrants came into the country in 24 months. That's really something. And 60% of them worked. Legal and illegal, 60% of them worked. So that's a lot of new jobs. We had a lot of good jobs reports long after the economy had recovered from COVID. So we got used to payroll reports on the first Friday of every month with 200,000, 250,000. That was just immigration. Well, not only has immigration stopped, but self-deportation of immigrants who kind of want to get out while the getting's good has really become a thing. In the last 4 jobs reports, we can see that 980,000 of the recent immigrants have gone back home from wherever they came from. And 60% of them worked. So that's 60% of 1 million people leaving their jobs. Now, we've kind of been lucky in that most of those jobs, all of those jobs, in fact, a little bit more than all those jobs, have been taken by native-born Americans. So that's why we don't have negative payroll reports. But normally when you see a negative payroll report, that means you have a recession coming because companies are scared and they're laying people off. This is not that at all. This is because very large numbers of workers are leaving this country and just laying down their tools and leaving their jobs. So unless we can get immigration going again, our jobs reports on the first Friday of every month are going to be about like last time, because that's the number of new working adults that the native-born population is capable of generating endogenously without help from immigration. That's the new normal. So sure, we have the revised May and revised June that's like 20,000 jobs each. Well, that's just normal statistical variation if you accept my idea that the normal is about 75.
Yeah, how about a quick thought from you on inflation?
Inflation's a target. Solved problem.
Inflation is at target, so the problem has been solved. Is that what you just said?
That's what I said. So everybody's losing their mind about.
You're not concerned that tariffs may raise inflation because the Fed, that was something they were concerned about.
Yeah, so I get it. I get the concern. It just hasn't materialized. So, Powell at the last FOMC meeting is talking about goods inflation, because it's goods that are tariffed, not services, right? So you'd think you'd see some goods inflation. Well, we got the GDP report last Wednesday, the same day as the Fed meeting in which he said these silly things, and we know from the GDP report that goods inflation for the second quarter was not the Fed's target of 2%. It was 0.2%. It was a tenth of the Fed's target. So Powell looks into the camera and says we're seeing goods inflation already because of tariffs, but you're not. It's almost deflation.
How do you think the market can behave with all of the juggling of the balls in the air, Donald? I love how emphatic you are about each particular topic. The market has been hovering around highs, right? We hit some records last week. What are your thoughts on where the market might be headed? Will we see new highs between now and the end of the year?
I love the way you frame the question. This is a question of juggling balls. We got a lot of different balls. We have to keep them in balance. We have to not drop them. So we've been talking about, some bad balls. We've been talking about tariffs. We've been talking about immigration affecting the jobs picture. We haven't mentioned at all the one big beautiful bill, which is $262 billion a year of new tax cuts, not just extending the expiring provisions of the past law, new tax cuts, half for individuals, half for corporations. So the half for corporations, which is about 125 billion, it's permanent, and it starts in 2025. It's retroactive. You ever seen stimulus like that? So, I don't love the tariffs. I think they're anti-growth. But when you set the anti-growth tariffs against the wildly pro-growth one big beautiful bill, you're juggling your balls and you're not dropping any. That's great. That's why stocks are at all-time
Money in
highs.
the market. I understand all these things are wild cards. You're the chief investment officer. Are you keeping the money in the market, or are you hedging big time?
No, I'm keeping the money in the market. We're juggling balls just fine, and I think you can get yourself all distracted by just the sheer velocity of change that's happening here. But if you look at the details and look at those different balls and look at the skills of the jugglers involved here, how can you not be invested?
Are you going to say you love a sector over another sector? Tell me some sectors.
Well, I think there's an opportunity here. Nobody's going to like me for saying this, but another one of the balls we're juggling is that Trump is very rapidly and aggressively doing deregulation in the U.S. economy, and the two sectors that should get the best benefit from that are energy and banking. And right now, the energy sector and the financial sector, they're both the cheapest sectors in the S&P 500, and they haven't outperformed the S&P 500 so far this year. They did in the first quarter when all the deregulatory initiatives were announced. And now they haven't. You can reload that gun now because the deregulation is just getting bigger and bigger and better and better and getting more and more put in place.
Don Luskin, thank you. It's great to speak with you. Chief Investment Officer, Trend Macro, Donald Luskin. Thank you.